The year is 2025. The world stands at the precipice of a new economic era, one marked by significant shifts in trade dynamics. The globalized world, once characterized by the free flow of goods and services, is witnessing a resurgence of protectionist measures. Countries are increasingly prioritizing their own economic interests, leading to a complex web of trade barriers. On February 1st, a new wave of tariffs crashed onto the shores of international trade, sending ripples of uncertainty throughout the global economy. These measures have created a turbulent environment for businesses and governments alike. These tariffs, a form of tax levied on imported goods, signal a significant shift in international trade policies and have far-reaching implications for businesses and consumers alike. The cost of imported goods is rising, affecting everything from electronics to everyday household items. These tariffs are not merely abstract economic tools, they represent a tangible reality for individuals across the globe. The impact is felt in the prices we pay and the choices available to us. From the cars we drive to the food on our tables, the impacts of these tariffs are poised to reverberate through our daily lives. The ripple effects extend to various sectors, influencing job markets and economic stability. Understanding the rationale behind these tariffs, their potential implications, and how individuals can navigate this evolving landscape is paramount. Knowledge and adaptability are key to thriving in this new era. As we delve deeper into the complexities of these tariffs, it is crucial to remember that amidst the uncertainty, knowledge is power. Staying informed can help mitigate the negative impacts and uncover new opportunities. By understanding the forces at play and making informed decisions, individuals can weather the storm and potentially even find opportunities amidst the challenges. Resilience and strategic planning will be essential. The world is changing, and adapting to these changes is essential for navigating the path ahead. Embracing flexibility and foresight will be crucial as we move forward in this new era of trade barriers. The motivations behind the implementation of these new tariffs are multifaceted, reflecting a complex interplay of economic and political considerations. These measures are not just about numbers and trade balances, they are deeply rooted in broader national concerns and strategic objectives. One of the primary arguments put forth by proponents of these tariffs is the need to combat illegal drug trafficking and address immigration concerns, particularly along the US-Mexico border. They believe that by imposing these tariffs, the government can exert pressure on neighboring countries to take stronger actions against these issues. The tariffs, they argue, will serve as a deterrent, stemming the flow of illicit substances and unauthorized immigration. This approach is seen as a way to bolster national security and ensure that the borders are more effectively managed. Another key driver behind these tariffs is the desire to revitalize American manufacturing. By imposing higher costs on imported goods, the government aims to create a more favorable environment for domestic producers. By making imported goods more expensive, the tariffs aim to incentivize consumers to purchase domestically produced goods, thereby boosting domestic production and creating jobs. This strategy is intended to reduce the trade deficit and strengthen the national economy. This protectionist stance seeks to shield American industries from foreign competition and revitalize the country's manufacturing base. Supporters argue that this will lead to a resurgence in sectors that have been in decline for decades. However, critics argue that these tariffs are a blunt instrument, likely to cause more harm than good. They point out that such measures can lead to retaliatory actions from other countries, sparking trade wars that could have far-reaching consequences. They contend that the tariffs will ultimately hurt American consumers, who will face higher prices for a wide range of goods, from automobiles to groceries. This increase in costs could disproportionately affect lower-income families, exacerbating economic inequality. This, they fear, could lead to inflation and stifle economic growth. The ripple effects of such economic policies could be felt across various sectors, leading to a slowdown in overall economic activity. The debate surrounding these tariffs highlights the complex trade-offs inherent in navigating a globalized economy. Balancing national interests with the realities of international trade is a delicate act that requires careful consideration and strategic planning. While the stated goals of protecting domestic industries and addressing social issues are laudable, the potential economic consequences cannot be ignored. Policymakers must weigh the immediate benefits against the long-term impacts on the economy and society. Only time will tell what the ultimate impact of these tariffs will be. As the situation evolves, it will be crucial to monitor the outcomes and adjust policies accordingly to ensure the best possible results for the nation. The ramifications of these new tariffs are far-reaching, impacting a wide array of industries across the globe. From manufacturing to agriculture, the ripple effects are being felt in every corner of the economy. The automotive industry, heavily reliant on global supply chains and cross-border trade, is among the hardest hit. The intricate network of suppliers and manufacturers means that even a small disruption can have significant consequences. Companies like Ford and General Motors, which source parts and assemble vehicles in multiple countries, face increased costs due to tariffs on imported components. This not only affects their bottom line, but also their ability to compete in a global market. These costs are likely to be passed on to consumers in the form of higher vehicle prices, potentially dampening demand and impacting sales. The average consumer may find it more difficult to afford a new car, leading to a slowdown in the automotive market. The agricultural sector is another casualty in this trade war. Farmers, who already operate on thin margins, are finding it increasingly difficult to stay afloat. Tariffs on produce from Mexico, a major supplier of fruits and vegetables to the United States, are already causing price hikes for consumers. This is particularly concerning as it affects everyday items that are staples in many households. Tomatoes, avocados, berries and peppers, staples in many American households, are becoming increasingly expensive. The rising costs of these essential items are felt most acutely by families who are already struggling to make ends meet. These price increases are putting a strain on household budgets and raising concerns about food security, particularly for low-income families. The impact on their daily lives is profound, forcing many to make difficult choices about their spending. The dairy industry, already grappling with oversupply and low milk prices, is facing further challenges due to retaliatory tariffs imposed by other countries. This adds another layer of complexity to an already struggling sector. These tariffs are limiting export opportunities for American dairy farmers, exacerbating their financial woes. The inability to sell their products abroad means that many are left with surplus stock and dwindling revenue. The lumber industry, already strained by high demand and low supply, is also feeling the pinch. The added costs from tariffs are making it even more difficult for businesses to operate profitably. These are just a few examples of the many industries caught in the crossfire of this global trade war. The interconnected nature of modern economies means that the effects are widespread and multifaceted. As tariffs continue to reshape the landscape of international trade, businesses and consumers alike must brace themselves for a period of uncertainty and adjust their strategies accordingly. The long-term implications of these changes are still unfolding, and the full impact remains to be seen. So, let's take a step back and look at the 2018 steel tariffs. What can we learn from them? Well, first off, it's important to note how these tariffs impacted both the domestic and global markets. The tariffs were intended to protect local industries, but, as we saw, they also had some unintended consequences. Prices for raw materials went up, affecting a wide range of industries. It's a classic example of how interconnected our economies really are. Now, shifting gears a bit, let's talk about financial advice for individuals. In times of economic uncertainty, it's crucial to have a plan. Diversifying your investments can help mitigate risks. Additionally, keeping an emergency fund can provide a safety net when you need it most. And of course, always stay informed about market trends and changes. Knowledge is power, after all. You might be wondering, is there a silver lining to all this? Well, yes, there are potential market opportunities even in challenging times. For instance, certain sectors like technology and healthcare often show resilience. Investing in these areas could yield positive returns. Moreover, downturns can sometimes offer the chance to buy valuable assets at reduced prices. It's all about spotting the right opportunities and acting wisely. Finally, here's a call to action. Whether you're an individual investor or a business owner, staying proactive is key. Assess your current strategies, make informed decisions, and be ready to adapt. Remember, challenges also bring opportunities. By staying vigilant and prepared, you can navigate through uncertainty and come out stronger on the other side.